It's a new week, and I dare say thank God it's Monday, because that means we have 5 days to capture current and relevant business conversation in 5 episodes of Business Morning here on Channels Television. You're welcome. I'm Ini John Mekwa. Let's start with what's going on in the oil space. Prices rose today in volatile trade, reversing earlier losses as tightening supplies outweighed concerns about slowing global economic growth and fuel demand. Brent crude futures rose 42 cents to $113.54 a barrel, while U.S. West Texas Intermediate crude was at $109.85 a barrel, and that was an increase of 29 cents. Front month price dropped 9.2% last week. That was the first decline in 8 weeks. The impact has been partially mitigated by the release of strategic petroleum reserves led by the United States and a ramp-up of production from OPEC+, although that's thinning the world's buffer against further supply disruptions. Also, Libya's oil production has remained volatile, following blockades by groups in the country's east. In Nigeria, the Export Promotion Council, NEPC, is targeting growing trade export between Nigeria and Togo to about $650 million by 2025. And this was told during the launch of a trade hub established through a collaboration by the NEPC, Nexim Bank, and the National Association of Industrialists. The executive director of the council, Mr. Ezra Yakusak, explains that the move will help Nigeria achieve its drive for the improvement of non-oil exports, while the trade hub will serve as the central location for all exports from Nigeria to the West African region. The plan, according to Mr. Yakusak, help formalize all forms of trade in the region, as well as see to the realization of the set target for the attainment of the Africa Free Trade Continental Agreement.
Volume between Nigeria and Togo is a bit high. It's encouraging. It's encouraging comparable to other African countries. Right now, Togo is number one in West Africa in terms of exports to Togo. We export about, as at 2021, and this is the ITC trademark. They recorded a trade volume in terms of export of about $499 million to Lome, to Togo. And so, well, that beats other West African countries. So that's encouraging. But that is not enough. We feel that's not enough. And that's why we opened this trade house to see how we can assess other markets, other countries in the West African sub-region, especially the landlocked countries in Burkina Faso, the Niger, and of course Mali. And that's why we're doing that. And our assumption, our estimation is that with the opening of this trade house or the commission of this trade house, we intend to increase trade, export trade to Togo by about 30% in the next, by 2025. And that will give us about $650 million in 2025, at the end of 2025, with this trade house. We're doing everything to leverage on the African Continental Free Trade Area. With this agreement, Nigeria has to do everything to capture the African market, and this is what we are doing.
Well, from there, we'll go to the political economy. It's the hottest topic now. I mean, elections, party primaries are over. Nigerians know at least the presidential candidates of the parties. That's towards the 2023 elections. And while the candidates are engrossed with setting up campaign strategies and teams ahead of the elections and winning your vote, Business Morning is here to draw attention to the work ahead of the team that would be occupying Aso Rock in the different capacities by next year. Well, I will look at different areas with Professor Ndubisi Nwokoma. He's a director, Center for Economic Policy Analysis and Research from the University of Lagos. Good morning, Prof. Thank you so much for joining us.
Good morning. Thank you for having me. Good morning.
I guess I should ask. I mean, I think one of the biggest questions now is, I hope you have your PVC.
I've had mine for quite some time now. I mean, the last
Exactly.
election I voted, so I have my PVC. So
Great.
good.
Great, Prof.
Thank you.
So a foreign reserve, and these are some of the things we do hope that the candidates are looking at, and not just about winning the election, but the work that lies ahead for them. Foreign reserve, for instance, has been on a continuous decline. And this is in spite of crude oil globally hitting record highs, 123, 120. Nigeria is actually supposed to benefit from this. The reserve fell to 38.6 billion at the end of May from 41.5 billion in September 2021. For you and as an economist, what does this continuous decline in our reserves say about the health of the economy?
Thank you for that question. And I think the indicators clearly show that there's some measure of crisis in the economy. Maybe short-term in nature, but there's some crisis in terms of the sustenance of the system. One issue is that for the past few months, from the data from the MBS, National Bureau of Statistics, the level of capital importation has actually fallen drastically over time because of the level of insecurity and the level of uncertainty in the economy. That's one. Secondly, our oil production has actually also fallen. It's about 1.4 million barrels per day, which is very, very low. Despite the high price in oil, we can't really gain so much oil revenue. You know, oil is the major source of our foreign exchange earnings. That's a very, very critical thing. And then, based on developments globally, we don't have as high a figure for remittances as we used to have. So definitely, taking a look at all this, we find that there's need for us to address some critical issues. There's a lot of oil theft going on. So, and low level of oil production, lower than what actually we should have had by the OPEC quota. And of course, like I said earlier, low level of capital importation. Foreign capital is not flowing. Capital flows to where there is return. And of course, you know, at the last meeting of the Monetary Policy Committee, the FPC, they had to jack up the FDR so as to also, one, address inflation, and secondly, also encourage capital importation. So these issues show that there's some measure of some short-term crisis in the system. And I think nobody wants to invest where there's no certainty. Nobody in New York wants to come and bring in private capital when there's no certainty. So I think all these variables, factors, actually show that there is some work to be done by the authorities.
All right, Prof. There's work to be done. Obviously, we would not expect that the president, the incoming president, should have the knowledge to solve all of this, because you've pointed to the oil and gas area. You've talked about the issue of thefts and vandalism, which is not new in the system, unfortunately. You've talked about capital flight, which obviously is not also new in Nigeria. And then the issue of insecurity, which seems to have taken even a higher turn in recent times. So for you now and for Nigerians who are watching, what should they be looking out in an individual who can handle or get a team that can handle these issues? And this is just a little bit of what is ahead of us.
Yeah, I think the critical thing is two areas. One is the fiscal side, and the other one is the monetary side. On the fiscal side, we need a lot of discipline, which is actually has been missing over the years. Not just this particular government, before that, a lot of fiscal discipline, but basically in terms of foreign exchange and managing the economy. We need to take a look at the management, the demand and supply factors in the foreign exchange management. You know, have the demand side. Would this country depend so much on importation? That's an area we need to take a look at. There are many things that we can actually consume that are made locally. We need to begin to manage the demand for foreign exchange, because all that puts pressure on the foreign reserve. When every everybody wants to buy foreign this, foreign that. It's been quite some problems for the economy. Then supply management, this is a CBN program to encourage exporters to be able to earn foreign exchange. We need to really see how we can do it, because unless we have an increase in supply, inflows, the major source we have now is primarily oil. And oil actually is failing. It's not really, it's not as much as we would have expected. And we can hear the Minister of Finance always talking about revenue is our problem, revenue is our problem, and so on. To me, I think the critical thing is the management of the little revenue that we have. Yes, everybody needs more revenue. I'm sure you and I need more revenue, more income, but we need to find a way how we can bring in some discipline. So the next government, whoever is coming in as president or the next administration coming in, they need to focus on discipline fiscally, fiscal sustainability. That has been missing. And a number of times, because of this indiscipline fiscally, central bank has been bailing out the government. Ways and means, it's up how many trillion? About 19 trillion naira. It's keep on increasing. The federal government has been overspending. And each time they overspend, they'll go to CBN, Central Bank of Nigeria, to have some cover, overdraft. They take extra money and they will have the ways and means increasing. So CBN has actually been giving us a lot of cushion. And I think the need for fiscal discipline, which has been missing now, needs to be brought in. Whoever can bring that should actually be the person we should be thinking about. But that is up to Nigeria. So I think managing the supply and demand variables for foreign exchange is very, very important. Fiscal discipline so that they won't resort to central banks for ways and means regularly is a factor. Then the other issue is political interference in managing foreign exchange. There are many people who don't need this foreign exchange for themselves, but they do it as middlemen. There's a lot of racketeering going on. And with that, it adds to the price, because exchange rate is a price. We now see the wide difference between the official market and the parallel market. 600 naira or 610 naira per dollar in the parallel market, and about 420 in the official. So you can see the gap is so attractive. And so there's a lot, as alleged, a lot of political interference, racketeering going on. So someone who can be disciplined to be able to close this gap, I'm sure that will be able to, it will put less pressure on the reserve. Because when people are getting what they don't really need, they put some margin and they sell off. And then the end users actually are paying very highly, and that fits into inflation. So these are areas we need to take a look at. So whoever is coming in must bring in, one thing it needs to bring on board is the issue of discipline. Because if we keep on doing the way we are doing in the next administration, I think it'll be very, very bad news for the economy.
Yeah, and another thing I think that connects to that, when you talked about revenue, is the warning of the IMF of Nigeria possibly using 100% of its revenue to service debts in a couple of years, 2026 to be precise, even though it looks like it might happen before then, because at the moment we are using about 90%, to service debt. I guess that is captured in the area of fiscal discipline that you're talking about, because I mean, economists like you have said it's not wrong for a country to borrow, but it's actually what they use the money for that matters.
Yeah, I think your point is quite valid, but when you borrow for consumption, that's the problem. And that has been the case for in this administration, for a number of years now. When you have your debt service payment, the ratio to revenue is about 90%, which means for every 100 naira you earn as revenue, either from oil or from wherever, for every 100 naira you earn, you use 90 naira to service the debt you had incurred before. And then you have only 10 naira left out of the 100. Then you have to borrow more, because if you don't borrow more, you cannot sustain the system. So that is the problem. And if we keep, so the borrowing continues. From the last figure from the DMO, it says that we have about 41.6 trillion naira debt as at March of this year. Over 41. And this government made a debt profile of about 12.5 trillion when they came into office in 2015. About 12.5. Now it's about 41.6 over this. And so the next administration, we need to start pitching them ahead of time. And I think that area the government has not really been shouting about, which they should shout to themselves, is cutting down the cost of governance. They've been shouting for more revenue. I don't know where they'll get that from. Because people have been taxed in so many areas. They have taxes, stamp duties, and many taxes that were not there before they came on board have been introduced. And yet the government is still crying and shouting, they need more revenue, they need more revenue. Of course, they should need more revenue, but why don't you start from the expenditure side and see where we can cut the cost of governance, the presidency, the bureaucracy is choking. And that is why we have the ways and means as a central bank increasing, because there's fiscal indiscipline. So I think this issue actually is, we are actually there, everything is finished. So the debt service payment to revenue ratio is very high. And the IMF, in my opinion, they are right. And like you said also, I also agree with it. We may even get there before the 4 years time, which from their prediction. So we need to, the critical thing is to talk about fiscal discipline. Very, very important. And I think it's very, very an issue to look at. The other issue is about the fuel subsidy. That has put so much pressure on government. Government needs to address that issue about the fuel subsidy. In as much as it could be very painful, we need to begin to address it, but in phases, and let the federal government bear the brunt because it is their policy. So government needs to take up that issue again and see how we can adjust so that the economy will quickly adjust to the new normal. And then this burden on government spending will be reduced so that we will not get to a level where we spend all the money we earn to service debt. We should address the issue of fuel subsidy, and it's very, very, very important. And if we don't address the issue of fuel subsidy, in my opinion, we need to address it and actually eliminate it, but not totally, and do it in phases. And alongside, we should be thinking of local refining of petroleum products. So all this will have to be done together. This is the way out, where something should be addressed. Look at the issue of local refining and minimize the potential of petroleum products. And then we should take a look at discipline in our expenditures. I think there's so much waste. And thirdly, if you look at the countries that give us this debt, they are very, very prudent with their resources, those that we are borrowing from. But we borrow from them, and then we are very extravagant. You see a governor coming in with 30 cars, a convoy. The president has a jet. He goes abroad, parks the presidential jet abroad. The daughter takes the jet. So, this kind of indiscipline needs to stop. And unless we do that, we keep on moving on the way to perdition. So we need to address these issues, fuel subsidy, indiscipline, and then things will turn for the better.
All right, Professor Nwokoma, thank you so much for sharing your thoughts with us. I mean, if I didn't hear anything from you, I did hear fiscal discipline. That is one thing Nigerians should look out for as we get our PVCs and get ready to vote and listen to all the campaigns from the politicians. This is our reality, and we need to look out for some of these qualities, in the persons that we want to vote. Thank you so much, Professor Ndubisi Nwokoma, for joining us this morning.
Thank you very much.
So now we'll look at energy sufficiency. As we know, inflation is one major buzzword globally at this time. And the drivers of that, food prices and energy. So from the Nigerian perspective, we'll talk about energy sufficiency. After the break, this is Business Morning on Channels Television. You're welcome back. Well, a major driver of inflation globally is energy, expectedly too, as energy supply drives activities in the rail sector, and consequently, it affects GDP, revenue. So we ask, can Nigeria be energy sufficient? We have Idris Arua, energy market analyst, joining us for that conversation from our Abuja studio. Good morning, Mr. Arua. Thank you so much for joining us.
Good morning. Thank you for having me.
Awesome. So what will an energy-sufficient Nigeria look like?
Yeah, first of all, energy sufficiency is the availability of enough resources, such as energy resources such as crude oil, natural gas, electricity, and even renewable energy to meet the local domestic demand, and then producing excesses even for exportation. So, like for instance, NMPC under the leadership of Mr. Melik Golokari has set a target for that energy sufficiency in 2026. And what is the focus of this target? NMPC has set an objective to have a zero dependency on importation of energy resources from outside the country, because presently almost 100% of our energy resources are being imported from outside the country. And that's why we're talking about subsidy and a lot of other issues. Now, the focus is that by 2026, Nigeria will be energy self-sufficient and NMPC will become a net exporter of energy resources to the outside world after satisfying the local demand for energy. And these, they have strategized and have been working to use the natural gas as the energy transition bridge.
Okay, that's very interesting, and it would warm the heart of a lot of Nigerians, except that we would like to know the plan towards this. 2026 is just in 4 years as we speak now. I don't know. I mean, Europe is actually out looking for gas, and it will give us a lot of revenue, reduce our debt servicing, and, you know, if we could actually have that infrastructure to supply the gas. So what's the plan? Where are the milestones, the targets to this 2026? So it's not just another policy that we've heard.
The good thing is the President Muhammadu Buhari's administration has commenced the natural gas revolution as far back as 5 years ago. They kick-started with the Train 7 gas pipeline project, which has increased Nigeria gas pipeline, that is liquefied natural gas production, by 35%. At the same time, the dualization of the Extravos Lagos pipeline system, now increasing the capacity of that pipeline from 1.1 billion standard cubic feet per day to 2.2 billion standard cubic feet per day. Then the OB3 gas pipeline project has also with a capacity of 2.4 billion standard cubic feet per day. And the ongoing AKK, that's Ajokuta Kaduna Kanu gas line project. That will take another 2.2. The actual focus of NNPC between now and 2026 is to ensure, because these gas pipelines have nodes where you can connect to other states and other regions within the domestic needs. And the target is to get as much as 8 billion standard cubic feet of gas distributed around the domestic, the Nigerian states to meet up the domestic need. Then when you now talk of other petroleum products, like refining, where the major problem is, NNPC has embarked on actually rebuilding the refineries instead of the usual turnaround maintenance. And if you look at what's happening presently, the Port Harcourt refinery is undergoing a total rebuilding. And that, by next year, 2024, should be able to produce about 210,000 barrels of petroleum product per day for the domestic use. The same project is being planned For Warri Refinery, the same project is being planned for Kaduna Refinery. And with this investment, which has started from the beginning of this administration, I'm telling you, in the next 2020, we can achieve the NNPC target, especially with diversification of our economy towards gas as a major source of energy. You know, with gas as a major source of energy, we can have industrialization, fertilizer companies, job creation, development of SMEs, and the world is moving towards the hydrogen economy, where even cars are being structured to run on hydrogen combustion fuel cell. And NNPC has the intention of also investing in the development of such vehicles, which was launched some time ago, gas-dependent vehicles, as against even the conventional electric. So for now, a lot has been done. And these projects are physical. If you're driving between Abuja, Lokoja Road, you see the pipeline project going on. The AKK project, the Escravos is completed. The OB3 pipeline is almost done. So the infrastructures have been put in place to increase distribution of energy within the domestic setting, and even to reach out to the outside world. Again, there's this Oro-Edo $200 million Oro-Edo gas pipe project ongoing. So a lot has been done in the last 5 years. And with the hope, because most of the commissioning date for most of these projects are 2024, and so we hope that by 2024, these things will come online. So NNPC has 2 years more to meet up the set target, and which I feel is achievable.
All right, Mr. Ariwa. Interesting. We'll get to the 2024 part in a bit, but very laudable projects you have listed and impressive too. But at a time when the country is, there's a threat of using almost all our revenue to service our debts, and in the face of increasing subsidy, you know, with the surging global oil prices, where is the funding for this major investment development coming from?
Okay, now I heard the professor talked about debt service to revenue generation being very high, and what do you need to do in that situation is to increase your revenue, and that is the vision this administration has put into the gas revolution. For instance, Nigeria has a gas deposit of 230 quadrillion BTU, which is massive. But what has been happening? There has not been infrastructure to unlock these potentials. Now, the AKK project currently is being extended across the Trans-Sahara route to Algeria, from where we'll be supplying the European countries. The West Africa Pipeline project, which was ideally designed to stop in Ghana, is also now being extended to Morocco. This will be achieved within the next 2-3 years. And once we achieve that, we have revenue coming in from our gas supplies to Europe, taking advantage of the present Russia-Ukraine crisis and taking advantage of the gas crisis in Europe. For instance, the America Understate Secretary, that's Under Secretary of State, Victoria Nolan, was already praising the President Mohamed Buhari administration for being at the center of energy transition internationally. And she went on to say, look, we have pressured the European countries to accept Nigeria as the replacement for Russia in the supply of gas. And if that happens, the European government, EU, is ready to finance this project to get the Nigerian gas to their borders. as a replacement for Russia. And once that happened, our refugee generation rate will increase, our internal domestic energy requirement would have been met. So the issue of money going to subsidy, trillions of naira, would have stopped. And the economy begin to diversify towards gas with industrialization, productions of fertilizers and all SMEs. The economy will boost. And you can imagine, just imagine Nigeria replacing Russia in the supply of gas to Europe. That
All right,
would
Mr.
be the
Arua,
biggest game
yeah,
changer for
well,
this country.
it would be good to imagine, but I mean, it would also be good to be realistic and know that it will require some sort of commitment, you know, and certainty from the Nigerian part, you know, which means that I don't think that the world would just come and dump their funds and say, we will help you to develop your infrastructure. It will also require some development from commitment from Nigeria. And that leads me to my next question, which is uncertainty. Even, I mean, I thank God you listened to the conversation with the prof. FDI has, capital flight has increased in Nigeria because, especially because of the political season that Nigeria is at this time. You know, with the politics, a lot of attention has gone away from governance to politics, and the uncertainty of where next Nigeria is going to, who is going to take the baton of running the country. And then you do have, one of the targets you said is to be commissioned by 2024. Or has the NNPC factored in a possible change in administration, the political season? Have this been factored into this target that you know, we have for energy sufficiency?
Now, the beauty of this gas revolution is these are not legacy projects. These are projects that are structured as policy and part of governance. They are not legacy projects. They are not projects that the Mohammed Buhari administration want to say, oh, I did it. No. We are laying the foundation for the future. Just using the word of Professor Dora Koyeli, that the country will prosper when those elders who do know they will not live long to eat from the mango tree decide to plant the mango tree. That is exactly what this government is doing. And that's why NNPC can confidently tell you, look, by 2016,
2026,
we are
you
going
mean?
to have energy sufficiency.
2026, you
sorry.
mean?
2026. That is 4 years from now. NNPC is confidently telling you that 4 years from now, they can have energy sufficiency within the Nigerian domestic, to meet the Nigerian domestic demand. Then two, the recent statement that I mentioned from the Undersecretary of State of United States did not just drop from nowhere. It was because they have pressured the European countries to also start investing in extending the ongoing gas project. For instance, the AKK gas project terminates in Kano. And that's just 614 kilometers. And you have a total of, it's just a small part of the total 1,300 kilometers gas network to Algeria. So they are interested. And the United States government has also promised to provide security along that corridor because of the issue of ISWAP and Boko Haram. And that's why they are also committing by giving Nigeria more weapons to fight the insecurity. And then there is the Morocco supply axis. So all these are realities, are things you can go physically. You don't even need to go online. As a journalist, make your research. Find out how far these are gone. These are realities on ground.
Right. All right, Mr. Idris Arua. I think it's a continuous conversation, and as we are setting our eyes on getting a new leader. We'll look for a leader who can follow up on some of these laudable achievements or laudable projects that you say the NNPC is working on. Mr. Idris Aruwa is energy market analyst. Thank you so much for sharing your thoughts with us this morning.
Thank you very much. I appreciate it. Welcome.
Well, let's just see what happened in the market last week, starting from equities. It was not a very good week for NGX investors last week. The market lost, investors actually lost 767 billion naira at the end of trading last week, and it was a shortened week. Remember, Monday was June 12 extended celebration for democracy. Yet the market lost 767 billion. Well, it's important to also note that it's not just about the Nigerian market. Globally, markets have been in the red from Asia to the United States. The issue of interest rates and inflation has been a major driving factors in investors' decisions. So Nigeria, unfortunately, was not immune to it, even though most of the time the market in Nigeria actually does lose that. So at the close of trading, we lost that from 53 to 52 to 51. The market closed at 51,000 level on Friday last week, and the all-share index was down 2.68%. At the close of trading, equities had lost the 28 trillion naira, 27.9 trillion naira. That's where it was at the end of trading. And volume was 940.89 million. Value 11.49 billion, and only about 20,000 deals last week. It wasn't a very good one. But let's flip over to the fixed income markets and see what happened. Also, we have Akpewe Oputu, fixed income dealer with Access Bank. Hi, Akpewe. Good morning.
Hi, good morning.
So tell me that the fall in the fixed income wasn't as much as that of the NGX last week, please.
No, so in the fixed income market, we've actually seen rates appreciate now, and this is due to the illiquidity of funds in the market. So we've seen yields trading much higher than where they closed at the NTB auction last week. So we've seen the 1 year trading around 6.2% levels as against the 6.07% where the auction for the 364 days closed last week. So even in the bond space, we've seen the long end, the 42s and the 50s trading above 13% level. So we've actually seen an appreciation in the yields.
Can we say that investors are leaving the NGX for the fixed income?
Okay, so there's actually an auction expected to hold today. So we have like 3 maturities on offer, and they're good. The investors are expecting to see higher yields at the auction. So they have the 2025 on offer, the 2032 and the 2042 bond on offer today. So we expect that the yields will actually come out higher than where they closed at the last auction. They're currently trading in the market. The 25 is trading around 10% levels, and the 32 is trading around 12.45%, and the 2042 at 13. So investors are clamoring for higher yield, given where the inflation figures came out at 17.71% now.
So we expect that to be oversubscribed.
We expect that there's going to be a lot of demand in the markets due to the expected outcome and the yields, but the illiquidity in the market would actually put some constraints to the allocation or the subscription we hope to see at the bond auction.
All right, Akpewe Oputu, thank you so much for sharing your thoughts with us this morning, and do have a good trading day.
Thank you.
We'll take a break now. When we come back from that break, we'll head to London. Do stay with us. This is Business Morning on Channels Television. The biggest rail strikes in 3 decades starts tonight in the UK. We have Juliana joining us now to talk about this. Juliana, good morning. Well, we've been talking about this since last week. It seems there's no solution in sight yet.
Good morning, Annie. No solution in sight yet. However, according to media reports, there is ongoing, pretty tense discussions between union bosses and bosses at TfL, the Network Rail, as well as the Transport Secretary, because, as you said, this is the biggest industrialised action in modern history, and 40,000 rail staff as well as TfL staff will be walking out from tonight. It is going to be a very painful week for commuters in the UK. Not just commuters, we've got some really big events taking place in this country. I think most notably it's Glastonbury. We've also got a few other dates at the Royal Ascot. We've got the British Athletics Championships taking place this week. So it's affecting everybody, even if you're not somebody who uses the train to go to work. And this is a long-running dispute between the unions and the Transport Ministry. They're not happy with their conditions at work. They're also not happy with pay. And it has become highly politicised because you do have a lot of people that like unions. You know, it's important that there are groups that can stand up for the layman or the working man, however you'd want to call it. But then, of course, if their strike action really affects you and has an impact on you, especially if you're going to a hospital, we know that the pandemic changed so many hospital appointments for people, particularly those facing life-threatening illnesses like cancer. And if you have been very unfortunate to have a date here, perhaps in London, to see a consultant this week, then, of course, you're going to be negatively impacted. So we will try to be updating yourself, Finny, as well as the business team. But please do bear with us because this is going to be a complete shutdown across London and the United Kingdom.
Wow, not a week to look forward to. We do hope that the talks will be fruitful and it could be averted, you know. But, Juliana, I mean, wherever you are, I do trust you will certainly be able to reach out to you to get updates. Well, looking at energy regulator now, Jem, there are new measures to protect consumers and prevent suppliers from charging high direct debt payments.
That's right. Another ongoing discussion that we've had on this programme is, of course, about energy bills, because this is one of the main reasons why we are having a cost of living crisis at the moment. Energy bills were increased by 54% in April by Ofgem, the energy regulator. They will be increased again in the autumn time, just when people are starting to put the heating back on. It's going to cost so much to pay your bills. And because of the increase in energy bills, last year, about 25 energy companies went bust. And that cost £94 per household to transfer a family from one energy supplier to the next. Now, of course, that cost a lot of money, and Ofgem want to make sure that these energy companies are robust enough and can go through the stress of what is likely going to be an incredibly difficult 6 to 8 months. So they have set out a new piece of legislation and proposals that they are going to clear with the British government to make sure that there is enough in place to make sure there's enough coffers in the account so that these energy firms can stay in business. There are also within the proposal some guidelines as to how these energy bosses should treat customers. The Financial Conduct Authority got involved last week and they sent about 3,500 Dear CEO letters just reminding these companies that we are going through a cost of living crisis. Yes, some customers may be behind or be in debt, but it's pretty normal considering that we are looking at inflation set to reach 11%. People really are not in a good position at the moment. So it's mindful of language, mindful of how we treat customers, but also making sure that there are systems in place so that we don't see as many energy firms going bust as we saw in the first tranche of really high costs of energy.
Yeah, unfortunate realities of our times, Juliana. Thank you so much. We'll talk to you at 1:30.
Thanks, Cindy.
Let's head to the crypto market now, where the reality of our times spread to there. And I think Bitcoin hit the, yeah, well, fortunate or unfortunate is our reality for now. Bitcoin hit that very, I don't want to say it's rock bottom now, because some people are saying it might go really, really low.
We don't even know where the bottom is at this point. And it was a rough weekend. We saw Bitcoin go below that 20,000. Quite bloody, that 20K support was, so exalted. You didn't expect it to break below that mark, but we saw that happen over the weekend. And but the extreme fear we saw last weekend was about 7 points, but we're having a little improvement this morning. It's at 9 points over 100. We're seeing a little bounce in the market with some of these altcoins and Bitcoin. Market cap is up about 7.51%, $879.10 billion for the total crypto market plus Bitcoin. Volume traded $78.71 billion, and that's down about 16%. Bitcoin dominance inching down at 43.43%, and we see Bitcoin did recover a quick bounce there to $20,092, up 9.78%. So it's looking green, but it's a battered market we're looking at right now, even though we're seeing a couple of bounces. Some analysts are saying this might just be a dead cat bounce, but who knows? We'll keep watching that. Let's bring in Olumide Additional now, financial market analyst. Hello, Olumide. Hello, Olumide. Can you hear me? Morning, Olumide. Yeah, quite a rough weekend most investors in the crypto market had, Olumide. And just looking away from price action, at this time, is the tech still intact? The tech behind Bitcoin and all these cryptocurrencies, are there any structural challenges we're seeing with all of this price volatility?
Very good question. But you need to understand that the problem we have in the crypto market right now is liquidity. It's not that the blockchain technology has not disrupted the industries across market spectrum, but you need to also look at the factor that high inflation worries and the fears of recession has really dampened investors' morale. And that's why we saw Bitcoin hitting the $17,000 level on Saturday. And that really spurred market sell-offs across spectrum. So rather than just looking at price actions, we're seeing that businesses across entities are still building on. Take a look at Meta, that's the subsidiary of Instagram and WhatsApp. They have an affiliation with Ionic brands, luxury brands, into how to bring these things to the metaverse. Also, we're seeing payment giants like Visa, MasterCard integrating on NFTs. So it's pretty much exciting in the ecosystem, just that price actions has really dampened a lot of retail investors, knowing fully well most of them are having their first bear market, Ladi.
Yeah, first bear market. I'm sure it's quite scary for some new investors in that market. But we're seeing the rout in the global equity space. We're seeing Bitcoin, being rattled and major cryptocurrencies. So, Olumide, I'm wondering, where is the opportunity right now in all of these markets?
Yeah, right now, people say cash is king, but the narrative is that the world's richest people don't really keep cash, and you understand why, because of high inflationary moves on cash assets. So I think it's all about picking value. So for investors, I think it's all about positioning. A lot of investors made mistakes because of the way they fix their portfolio, especially on risky assets, putting so much at once. So for investors that learn their lessons, I think gradually approaching the market, because Bitcoin and Ethereum are here to stay, actually, Ladi. And if you look at key blockchains across spectrum, they're likely going to become very relevant. So investors should really test the water with just their toes rather than all their legs at once. So I think pretty much that's what the market is really about. But upsides will really come, because we're seeing the market really going to bounce back. But time will tell. This year doesn't look like it. But yeah.
Time will tell. Thank you so much, Olumide. Always great to talk to you.
Yeah, thanks, Ladi. All
right, now, so looking at the top walls for market cap, we see it's all green. Nice bounces we're seeing there in the market this morning. BNB there up 8% at $208. And we see eCash also having that bounce up 7.02%. And looking at top 5 gainers there, we're seeing quite a massive bounce there from Syntax there, up 86.61% this morning at $2.87. We see most of these altcoins getting really excited with the bounce we're seeing from the $18,000 that Bitcoin actually dropped to. Looking at the top losers, we see more of stable coins, showing that traders are running into the market at this point. So it's still extreme fear, but there's a little excitement this morning. Don't know how long this excitement is actually going to last.
It's a cautious excitement.
Cautious excitement, yeah.
So like Olumide said, you enter the water with your toes and not with your feet.
Yeah, don't just dive in there, but you know.
Exactly. Thank you so much, Ladi.
Thank you.
Well, that's it on the program today. Thank you so much for being a part of it. It's just the first one. We have 4 more to go. But at 1:30, we'll be back again to give you updates from the world of business on Business Incorporated. I'm Ini John Mekwa.